Well, now we're going to carry on with the regulatory theme. Our next panel is how are regulators responding to innovation? Now, technology and innovation is generally, profoundly a pretty positive thing, but with all change comes risk. Now, this session is going to bring together global regulators where they're going to discuss how to encourage that innovation, but also at the same time protect billions of users of financial services across the world, which is no mean feat. So on that topic, I would like to welcome to the stage Honorary Caroline Pham. She is the Commissioner from the US Commodity Futures Trading Commission, followed by UK Senha, the former Chairman of the Securities Exchange Board of India, Kwok, the Senior Executive Director at ADGM, and Giuseppe Siani, Director General for Financial Supervision and Regulation from the Bank of Italy. They are going to be moderated by Salim from AI Monitor. Ladies and gentlemen, please come to the stage.
Thank you so much. And I would just like to say we've been regulated to 20 minutes, so we'll try to get through all the points quickly. And I'm very happy to have our esteemed guests represented from across the globe speaking about this very important topic, especially at this time. So let's get right into it. And I'd like to talk about, since we have representation from different parts of the globe, could you talk about what the process of legislation is, of adopting new innovations into the finance space? What is your approach and how long does it usually take? We'll start with Giuseppe.
Thank you for inviting me and also for giving me the opportunity to set the scene as a first speaker. As you know, we really follow the European process, which is quite complex and quite long, because we need to find an agreement across 27 countries and also to ensure consistency with Basel standards where needed. But it is also important because it allows us to incorporate our lesson drawn from supervisory experience and also from our contact with the market, given also our innovative channels that we have developed, for example, regulatory sandbox. Maybe I would give you a few hints really to set the scene. First, what we see in the market is that, of course, most banks have started their digitalization transformation. And then we see not only just new fintech companies entering the market, but also joint strategic partnership, which is a very important development because then you have much faster developments in the market. The second one relates to the challenges and constraints to this development, which relates first to the costs. Even though banks are supposed to invest a huge amount of money into this, then if you look at the overall cost that has been put so far, maybe it's not enough. The second challenge is indeed that there is not enough investments to address the legacy system, which is, as you well know, represent a constraint to further innovation and also to ensure proper data aggregation and reporting. Third, it goes without saying, relates to the lack of talent and people, not only at technical level, but also adequate competencies at the board level. My third point relates to what we are seeing in terms of the impact of the overall business model. The current innovation is significant, and then we have this type of platformization of the financial system, which allows the new entering of new players in the system, which raises challenges both in regulatory and supervisory perspective. But this is good because this ensures and improves the biodiversity in the market. But also raises challenges because maybe we are not able to use our fully fledged supervisory and regulatory toolkit, which is maybe one of the challenge. This leads to my last point, because if we have constraints, challenges, and opportunities, on the other hand, we also need to look at the risks. And it goes without saying that we see a significant increase of IT-related risk, data integrity, and cyber-related risk, which indeed deserves further consideration in both the regulatory and supervisory space. I will stop here.
Amazing. Thank you for those insights. And in the light of recent news with FTX collapsing, as a example of a crypto company, especially in a high risk, and the world is still trying to understand, about how to regulate crypto and do it properly. So I'd like to go to Y to speak about how do you encourage confidence and agility while you have, something like this taking place? Do you have an approach to that, and do you see it's still worth the risk of, being one of the first to really bring in regulation into this new innovation?
Right, that's a pretty tough question. I think the term agile regulator seems like an oxymoron, and it's always a challenge for us to manage as a regulator. But I don't think it needs to be self-contradictory, right? As a regulator, if our rules and regulations are not agile enough, not fast enough to reflect market realities, then we lose our relevance. We will have difficulty retaining talent and recruiting talent. But on the other hand, we cannot do away with our institutional character as a regulator because we will lose that credibility, right? So how do we find the balance? And to do that right, we have to get a few things right. I think first and foremost, a lot of this appreciation of risks comes with good judgment, comes with experience, right? And of course, as a regulator, the best way for us to find that kind of expertise out there is to recruit, right? But the reality is to get someone with knowledge of finance, technology, and risks, it's very difficult, right? So we need to have the right tools and governance. So our approach to that is, in terms of the right tools, is that we, of course, have the regulatory sandbox, which is an opportunity for us to get up and close with the fintechs to understand the risks, their associated models, and to make a call as to how we want to regulate them. So that's an important tool for us. Over time, we got more sophisticated, understanding the risks. So I think if FTX were to come to us today, right, you probably go through that process. We launched our regulatory framework for virtual assets in 2018. And truth be told, for us to reach that journey in 2018, we started in 2016 with the sandbox. And back then, we were already interacting with a few of these crypto players, right? So that gives us some insights as to how to regulate. But that said, having the tools is one thing, but having the governance within our regulator is also important. You need to have the right checks and balances. I think we trust in each other that we have the right expertise, right people to form that committee of wise men, right? So I think together we're quite glad, quite happy to be able to recruit a diverse talent of regulators. And I think finally, having that committee of wise men is not going to be enough. At the end of the day, how much do we know compared to the industry? And to plug the gap, the only way to do so is to work very closely with the industry. So collaboration at the end of the day is key. Right? So I think those 3 points, tools, governance, and collaboration with the industry, that would be my take.
Yeah, that's exactly. I mean, I like what you said in terms of you can't predict what's going to happen, but you can do what you can to mitigate, the risk that's involved. And Caroline, I can extend that to you as well. I mean, I know that the U.S. Put out legislation recently in June and has been discussing, whether has had a lot of discussion about this, whether it's a commodity or a security when speaking about crypto, and it's been an extended conversation. Can you describe that process and say, for example, like in this case, with FTX, what are the things that they're keeping an eye out for, and is it affecting, the decision making that's taking place at the moment?
So I have to give my quick disclaimer, which is that the views I'm sharing today are just those of my own as a commissioner. When we look at what's happening, I think it just makes this more imperative than ever that there must be a focus on risk management, and risk management must be at the core of the business. And besides that, we have to ensure that these crypto financial activities are brought within the regulatory perimeter so that they are held to the same standards as other financial firms. This is, I think, a critical point. It's something that's been widely recognized at the international level. And so I look forward to the US continuing to make progress at adopting and adhering to that same standard, because when we are in a framework of global markets, the risk cannot be contained within any one particular jurisdiction. And that's why it's more imperative than ever that there are no gaps.
Thank you. And I'd like to bring this question to UK as well, Because as we know, India hasn't really made crypto a legal tender in the country. But can you give us what India's approach has been to crypto, and maybe there are other priorities in the innovation space when it comes to finance that you're dealing with?
Okay, allow me to set the context first. And as we speak here today, the G20 meeting is on in Bali. So let us look at what is the political mandate to all the regulators so far as fintech is concerned. And the G20 mandate is very clear that they have to serve the real economy. Regulators have to ensure that fintech serves the real economy. It helps in channelizing money, all the savings and investments, and there is a fair and equitable access to it. If we look at all this, then we realize that fintech is not a means in itself. Fintech is not an end in itself. It is a means to the larger end. And keeping all this in mind, in India, 2-3 things have been guiding the regulators, both the Reserve Bank of India and SEBI. Number one is that the innovation has to reach to the largest section of the society who do not have access to financial services. And there are some great stories which have developed in the last 7 years or last 8 years. We can talk about that as we go along. But so far as crypto assets are concerned, or so far as the virtual assets are concerned, there is a taxation now. So if somebody has a gain on the capital gain side on the sale of virtual assets, that is taxed. People are allowed to do trading or have a deal, but the banks have not been permitted as of now to deal with the crypto assets. So we are somewhere in between, and I think the approach of the regulator is to wait how things develop, how the regulatory framework is strengthened, and maybe going forward, I'm in no position to say when it will happen, but maybe we'll be making some move. And obviously, the regulator will also learn from some of the mishaps which have taken place recently or are likely to take place. So keeping all that in mind, they will be taking it.
Mm-hmm. Well, thank you. And I think that's what's very interesting. There are different approaches to the same matter of like something more conservative approach. Some will take the high risk, to be able to adopt the innovation early and, as it develops. And I'm curious as well, if you don't mind elaborating on what are the other financial technologies that you're incorporating in India, because crypto isn't the only thing that exists. Mm-hmm. And what else is necessary to really move, especially a larger population, forward when it comes to the fintech space?
Okay. I'll talk about something which is called the India Stack. And India Stack, the basic infrastructure has been provided as a public good. So government and the public sector have provided that basic infrastructure. And it is modular in nature. It is something which even a small person can access. It is something which can be accessed by even larger companies without any discrimination. It is available 24/7. And based on this stack, other facilities can write. For example, your identity track, your services track, transfer of goods track, all that is developing. And this has had a huge success in the last 7 or 8 years. And this has been developed by the Reserve Bank of India and its affiliates with the cooperation of the banking system. So that's one thing which I would like to talk about. And the numbers are huge, so I don't have to talk about it. The second is about access to credit. In that area also, some innovations have taken place, and I'd like to mention that it's called account aggregator. So account aggregator is a fiduciary, it's a data fiduciary, and while they can pass on the data, they can transfer the data, they have no right over the data. They can't even see the data. They can't even store the data. And based on that, how credit can be given, and in India and maybe in other parts of the world, there are issues about providing credit to small and medium enterprises. So here what it does is that based on the account aggregator, which can access data, for example, from the Goods and Services Tax Agency, from the Direct Tax Agency, from electricity bills, and whatever you have. And based on that, you can go to a set of, to the account aggregator, who will pass on your request to a set of bankers who are already registered there. And you will be surprised to hear that an amount, for example, as low as $25, then can be provided, and that can be provided in a span of 10 minutes. And another thing is that you as an intending borrower, provided you have given your consent for that data to be shared with the bankers, you are not approaching bankers. You are approaching a platform where those bankers are there. And then based on how they evaluate you, they will be offering rates. And the lender has the choice, the borrower has the choice which bank to go. If there are 4 banks and there is a differential, he can choose any one of them. And the regulatory framework says that you don't have to go to your own banker. You may be having banking relation with one particular bank, but you can go to any of these bankers which are registered on the platform. So this is the type of innovation which is happening.
Oh, very interesting points. And going back to the process of legislation around for regulation, on new innovations in the finance sector, I'll direct this to Caroline and to Guiseppe. How, especially since you're both in regions where the conversation is in Europe as well, it's between the EU, has been an ongoing discussion, and it takes a while to get consensus amongst different groups in the US, between different parties. Do you find that process aids or gets in the way of reaching consensus and moving forward?
So in the United States, of course, we have a very robust political system, and of course in an election year there is a lot of debate and discussion. But what I think is important is under the US system, the regulators have been delegated and authorized with significant authorities and tools to address their respective markets. So the CFTC is an activities-based regulator with a twofold mission to ensure market integrity and to prevent market abuse. And so there are a number of tools and authorities that not only the CFTC, but the SEC and the bank regulators have to ensure that they are upholding the safety and soundness of the financial system. I think that the United States approach has clearly unlocked American innovation if you think about fintech more broadly. We have also the deepest and most liquid equity markets in the world. So I do think that the US system works, but in an election year, there's always a lot of debate.
Of course. And Giuseppe?
Okay, as I said, in the EU, indeed, we have a very long and complex process which involves a lot of different stakeholders and takes time. But I think that we should not forget that we are fully involved also in the definition discussion at international level, at the G20. And I think it's important always to ensure consistency between, on the one hand, the G20 developments, and on the other hand, some European specificities. I think that if you look at also at what's happening now with respect to innovation, innovation is a good thing. There is no discussion about that. We should promote innovation. Even ATM in the past was a significant innovation. So innovation helps growth, helps make the process much more efficient, but we should never forget about the risks. So in the end, the regulation is just a way of implementing principles that should be adopted by firms in the first place. When we talk from a prudential perspective of informed governance of risk, this means that at the board or the top of the firm that should look and understand at the risk. Then you should have fully integrated data aggregation and reporting to the board, and also a lot of skills and competencies. We have not discussed about data, maybe we do not have time, but in order to ensure some type of consistency at the global level, in order to tackle these global challenges, it's true that we need some data, because without data, we might take the risk of regulating the wrong development with the wrong tool. So I think that if you receive a request for data, it's not just a sort of a bureaucracy, but also a way to better understand what's going on in the industry and the market. I think it's also in the industry interest to work together, like it was said before, because I think that we share the mutual objective to try to develop a much better market and good practices.
And just to add on to that, I mean, the CFTC is unique among US regulators in that it also has the mandate to promote responsible innovation and fair competition. And part of that is because the CFTC's roots go back to a wholesale market, where you had dealers and other financial intermediaries, exchanges, clearinghouses, and so on. So the pace of innovation oftentimes outpaces the speed of legislation or regulation. And so that's why the CFTC has a principles-based regulatory approach, which can adapt and anticipate new changes and new risks to market structure more quickly.
Definitely, and that's I think where I'm trying to go with that, and that was a very good answer. In terms of with innovation, it's something you can anticipate, but you still have to act. But at the same time, create the regulation so to protect the market. And why I'll extend this to you, while addressing as well what UK had about what are other innovations that are entering the innovation finance space, and how do you address that? I mean, the UAE has had, and Abu Dhabi has had a very short, has really acted quickly, sorry, I should say, in creating regulation to bring in the innovation and to be one of the first to implement it. So how do you act when, for example, you have something that's new, that new, if you don't mind giving an example of, like, say, another innovation that's coming into play and how you're addressing that in the short term?
The kind of innovation that we're seeing in this region might not be what other jurisdictions see, right? So when I speak about the innovation that we're seeing, it's very much probably peculiar to our region here, right? And I think we have made a strong start, at least in the DLT space. And then that's a combination of essentially the government vision as well as enabling regulations. So that trajectory seems to be still going forward very strong despite the recent turbulence in the sector. And one of the latest things that we're seeing is actually in the area of institutional grade DLT solutions that have programmable capabilities using smart contracts to move, issue, and store digital assets, right? And that's a very mouthful, right? But I think just a subset of that, I think DeFi is essentially something which we are seeing coming our way, a lot of queries coming our way, and partly because we see the potential of DeFi, the composability of DeFi, where you take the output of one smart contract to fit into the input of another smart contract, and in the way you string the various bits together, allowing the possibility of various modules to be automated in one transaction. To us, that is very powerful. So we see that as likely to be the future of, at least in the financial sector within the region, which is why in April, we launched a discussion paper where we share our thoughts and views of how we could potentially regulate this space. And it's essentially, we don't exactly know how to regulate, but we want to poll the views of the industry. And to poll the views of the industry, we decided to go out first with what we think could be a possible model. The idea is to work with the global community to evolve a regulatory framework that we can potentially regulate, right? So, and of course, as part of that journey, we also invite DeFi players from around the world to join our regulatory sandbox to work with us, right? So the crypto winter has somewhat dented a bit of the appetite, but at least from what we are seeing in the early waves, right, are actually institutional players doubling down on cryptos to provide institutional grade solutions, for example, custody, right? There are players in the gaming industry looking at moving into the financial sector or financial services space. And gaming industry, they always use their native tokens, and traditionally it's within their own ecosystem, but increasingly we're seeing them having solutions that actually go beyond their ecosystem, where they allow tokens to be swapped with the larger virtual asset space. So that is something which we are seeing, and we are now trying to see or race with the industry to see how fast we can come up with something that would be able to cater to their innovation and to regulate them in a responsible manner.
Definitely. No, that sounds fascinating. And I think it just shows that anytime we think we've reached the limit of innovation, then there's something else providing a new solution. And also how important it is to manage the relationship between innovative solutions to move us forward, but also security with regulation and traditional institutions to work together. So unfortunately, that's all we have time for, but thank you so much for your insightful views, and we hope to continue the conversation. Thank you.